Bear market can be challenging time to trade or invest, especially for beginners. However, there are some strategies to consider when navigating a bear market. For clarity, a bear market is a widespread decrease in asset price of at least 20% from recent highs. While it is true that no market can continue to rise indefinitely, bear markets also offer opportunities. They can be a great time to learn from your mistakes, gather more crypto knowledge, and get yourself ready for when the market rises again. In this very video, we are going to give you 7 tips that will enable you to survive in such a bear market. Make sure you focus and listen attentively, for what we are going to say will enable you make good returns on investment in the bear market. Alright, let's dive into it. But before we do that, don't forget to press like, share, and subscribe to our YouTube channel. Alright, let's dive into it. The first one here is think about the long term. While our first tip here is thinking about the long term, it is also logical that you should know that the bear controlled the market during a bear market. And according to an old proverb, the best action in a bear market is to pretend a grizzly bear has attacked you in the woods. It would be risky to retaliate. The smart tip we could give you here for surviving in a bear market at this very point will be to lay low and refrain from making any quick movements. Alright, now let's jump into the second one, the dollar cost average. The dollar cost average in DCA is a method that allows you to divide your reserve cash into smaller sums and engage in several transactions over time. Adopting the DCA method in a bad market means you will be looking for investment opportunities when prices reach a specific target. Using this method, you lessen the volatility effect while possessing a significant number of financial assets all at once. This being said, let's look at the third tip here, which is diversify your portfolio. Your risk tolerance, time zone, goals, and other factors will determine how you share your portfolio. But you can always avoid the potentially harmful consequences of putting all your financial eggs in one basket by using an effective asset allocation plan. This is because the effect of bear market might not be as severe for investors whose portfolios contain a wide variety of assets. While the prices of assets typically decline during bear market, they are not always by the same or exact amount. Therefore, this wise method makes sure that your assets during a bear run have a mix of wins and losses, or winners and losers. As a result, the portfolio's overall losses will be lessened to the absolute minimum. This is why diversifying your portfolio in a bear market is very, very important. Alright, let's jump into the fourth one, which is trust the fundamentals. I know it is true that a lot of us who are interested in cryptocurrencies, for sure the bear market can be depressing, since we have to watch, or you have to watch your portfolio dropping, suffer severe losses and the rest for a very short period of time. And most cryptocurrencies will for sure suffer these very losses significantly in this very bear market that we are in. In fact, we've seen a lot of them suffering already. Okay, so but what are you supposed to do? You're supposed to trust the fundamentals, because there are some projects, if you will be able to pinpoint those projects looking at their fundamental analysis, then for sure you will know that they will stand the test of time, and after the bear market they are going to rise far beyond what you could actually think of. And even in the bear market, their prices will not drop as other projects. And I'm for sure telling you this that a lot of projects are going to fall while others are going to rise. So the ability of you pinpointing those projects that will rise will enable you have a good portfolio. Your portfolio will not suffer that much. But if you make the mistake of not trusting the fundamentals and you now back project that will end up falling, then for sure you will end up having a very bad portfolio. All right, now let's jump into the next tip, which is consider stable coins. Now guys, here is the fact. The majority of cryptocurrency traders will gauge their profit and losses in terms of their value in fiat. whether that is the value of the dollar or their local currencies. But the key thing here is to avoid potential losses during a bear market. It may be wise to keep a portion of your cryptocurrency holdings in fiat back audited stable coins like USDT, BUSD, and the rest. Then to be ready for whenever the market starts to rebound, you can convert more of your fiat asset into stable coins like the USDT, the BUSD, and the rest. Alright, this being said, let's look at the sixth one here. The sixth one is explore staking options. Staking is one approach to surviving and enhancing crypto asset amid a protracted downturn in the cryptocurrency market. Staking might not be a popular tactic in bad market. Still, for some cryptocurrencies, the initial investment required to meet the staking threshold is substantially lower than in a bull market. So all you need to do is that you can continue to make minor gains consistently and earn passive income by locking your cryptocurrency on a blockchain for a limited period of time. And there are many exchanges that gives you the option of staking some of your cryptocurrency assets. All right, let's take a dive into the last but not the least tip, which is increase your crypto knowledge. As we know, bear market offer a much needed break from the excitement of a bull market, even though they make it harder to make money while trading or investing on the long side. But during this period, you can learn more about the market, determine what strategies are effective and ineffective, and better position yourself for the upcoming bull market. Some of the more valuable topics you might want to look into or review can be like say technical analysis, fundamental analysis, sentimental analysis, risk management, trading strategy, and the likes. You will have the best chance of succeeding in a bull and bear market by ensuring you are adequately prepared and equipped to detect and take advantage of potentially profitable trading chances. This being said, it is logical we round this up in a nutshell. We have looked at what the bear market is and some valuable tips for surviving in a bear market. So, a basic rule is to avoid selling everything you own in a panic. Instead, take advantage of this opportunity to do the dollar cost averaging, diversify your portfolio, explore staking options and stable coins, or even learn about other cryptocurrencies and release your holdings. Studying the tips we have covered here and an analytical outlook and practice may provide you with a competitive edge in the market. But remember that before engaging in any trading or investment activities, always do your research. This being said, we call it a day and we appreciate you all for being here with us. Don't forget to press like, share, and subscribe to our YouTube channel. We love you all.